All right, welcome to the daily market recap for Wednesday, September 24th. In this video, I'll be taking a look at the action today from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the market open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments section. Starting off with the NASDAQ, again, not a data error. We've had two red days in a row. Kind of shocking with how strong this market's been. But today, little gap up at the open, reverse, pretty big shakeout to the 10-day EMA. Not quite at that level. Bounce back up, closed over the support gap. We did close under the 5-day moving average, which is your first kind of signal that momentum is drying up a little bit. Overall, I don't see anything wrong with this chart. We could even pull under the 10-day, come into the 20-day, and the uptrend overall would be perfectly fine. But some signal of some profit taking, some momentum dry up going on in the last 2 days. S&P 500, similar little gap up, open on the high, close a little bit lower in the range compared to the NASDAQ. Also under the 5-day moving average, bounced after undercutting the support gap and the 10-day EMA, only down 0.3% today. IWO, these are the growth stocks of the Russell 2000. A little bit more weakness here and on increase in volume. So yesterday we made a 52-week high, but closed red. Today we gapped down, had a little rally in the morning, and then eventually closed right on the low of the day, back through that 5-day moving average and just over the 10-day. So I use IWO and ARKK, as we'll get to in a second, kind of as risk on, risk off parameters for growth stocks. And when they're above their 20-day EMA, I still consider the market risk on. But if you're under a 5-day EMA or under a 10-day, you're at least pulling back and seeing momentum dry up, which if you take a look at the leaders, like we'll do next, you'll see that. ARKK, little undercut of the 5-day moving average and support gap, closed above both of them, did decrease the support gap range a little bit, but did so on lower than average volume. So ARKK is actually consolidating extremely well over the 5-day moving average, while we've seen some other things pull in. And then IBIT as a way to track Bitcoin, a little bit of strength today, rallied back up to the 10 and the 20-day moving averages. Now we'll see if this is going to eventually be a higher high if we take out the highs from September 18th, or if we're going to see another set of lower lows if we take out the low from September 23rd. Right now, I think it's anyone's guess at this point. I don't love the false breakout that we had on August 13th. I am fine with the pullback into the kind of base breakout that we had on the 29th, where that found support. But now it's just trading back and forth. So we'll let the range kind of build out to decide where we're going to be trending next. Getting into the leaders list, I did have to cut one stock. Took off ALAB off the list. Fourth gap down in a row. We made new highs on September 18th. Then we gapped down, closed above the 5-day after testing the 10. Gap down, closed under the 5. Gap down, closed under the 10. Gap down, closed under the 20-day EMA. So 4 gap downs in a row. There's a chance that this bounces at the gap zone at like 191.50. That would be kind of a breakout retest. But overall, I think this kind of needs a new base here. So we kicked out ALAB and we added in Tesla, which earlier this month broke out of a multiple month base consolidation, whatever you want to call it here, where the 200-day moving average had caught up to price. We had awesome price action September 11th and the 12th. Big gap up on the 15th and a little profit taking. But this has just been surfing the 5-day moving average. And you'll see this a lot in the strongest stocks in the market, where you get red candle closes over a rising 5-day EMA on lower volume than the previous day. That's not a bad sign unless you follow through to the downside and lose the 5-day. But as you can see here, the strongest stocks, when they do that, they'll gap up the next day, open on a low, close middle part of the range. Yesterday, we had kind of the ugly close near the low of the day on the 5-day moving average. We take a look at volume. We see that it's lighter than average, lighter than the previous day. And we followed up with a gap up, open on the low, close near the high of the day. Incredible relative strength out of Tesla compared to the rest of the market. They definitely deserve a spot on the leaderboard. Alibaba, massive gap up. End of the day, up 8.2%. And if you've been following along on these daily recaps, we've been talking about the China trade for months now. KWEB, the Chinese internet ETF, broke out of 3.5 year base just a couple of weeks ago. Alibaba, similar 3.5 year base breakout. Big move on earnings. Did a secondary offering that got soaked up, and we've just been rocketing higher. Now, if we need to take a little bit of profit, let the 10-day moving average catch up, that would be perfectly fine. But I don't think the Chinese trade is one to ignore. NBIS, just incredible action here. Another name that gapped up 49% on September 9th, did an offering that got soaked up, all while the stock closed over the 5-day moving average on every single day. We reclaimed that high volume close from the gap up on September 19th, and it's been off to the races since. So there's still a lot of strength in the market. We're just seeing that strength kind of narrow into a smaller and smaller number of stocks. Next, we have APP, first red day, and we're still kind of consolidating over this 5-day moving average. If we break today's lows, chances are this pulls into the gap zone around 606, maybe even a little bit further than that. So we'll see how this tracks. Google first closed under the 5-day moving average, also closed under the 10-day moving average, but 3 days of declining volume on this pullback. So overall, don't see any warning signs just yet on this name. CLS, now this is a good kind of chart to look for a warning sign. We gapped up on the 5th. We traded sideways for about 2 weeks. Yesterday, we broke into an all-time high, but we squatted. A squat is not the worst type of price action where you make a move, you rally up higher, but then by the end of the day, you kind of close lower. Not the worst price action, really at that point, kind of meaningless until you get followed through either to the upside or the downside. And what CLS did was a false breakout yesterday, and then we gapped down. We opened on the high, closed near the low of the day, lost the 5 and the 10-day moving average on an increase in volume. So you don't have to trade all of these stocks that I'm talking about, but I like to set alerts at very clean pivots like we saw on CLS and see, do we get strong price action? Do we see price break through that pivot and continue forward? Or are we in an environment where people are starting to take profits and we get that pivot breakout only used for liquidity to sell into, which for CLS, that's one strike against the market because that's exactly what happened here. CRDO, secondary gap down, lost the 5 and the 10-day moving averages today. Also closed under the 20-day, closed right into the support gap from the September 9th to September 10th gap up on an increase in volume. Usually, the first test of the 20-day EMA is a good risk reward spot. So we'll see if this can hold right around the support gap, right around the 20-day EMA, or do we see kind of like A Lab, another gap down, an accelerated move lower. But finishing the day down 7.9%, pretty rough. OKLO down 8% today, but if you zoom out on the chart, you wouldn't even recognize that it was down 8%. This could be one of those candles where you get a red candle close on the low of the day, on declining volume above a rising 5-day EMA in a momentum name. So very similar to Tesla, I'm kind of expecting that we'll get either a gap up or some more strength here. If we follow through and close under the 5-day moving average, then that would obviously invalidate that. But I still have my final piece in Oklo, and although the price action was ugly today, the volume wasn't that heavy. We're still above the 5-day EMA. I, I want to hold on to that last piece until it kind of forces me out. And then BE, we had a gap down off lows yesterday, another big gap down today under the 10 and the 20-day EMAs. Shook out the 20-day, shook out the support gap, reclaimed both, and then closed right near the high of the day on a big uptick in volume. I tried this morning on the undercut and reclaim of the support gap in the 20-day EMA with like a 1.5% stop. Got stopped out immediately, kind of a paper cut trade. Um, just looking for kind of a snapback rally, not like all the way into new highs. But again, the first time you test the 20-day moving average and when that aligns with the support gap, that's a trade that I tend to take because the risk reward is pretty high. But now, like we've seen a lot of volatility. I don't think there's like a really clean setup here. We'll keep it on the list, and if we close under the 20-day, maybe we'll toss it out. Getting into the industry ETFs, MSOS, one of my larger positions. If it might be my largest position actually. This is the cannabis ETF. Great example of when a squat doesn't fall to the downside. So yesterday we had good price action in the morning, ugly price action in the afternoon. We closed on the low of the day, but if you don't follow through to the downside, it's actually a pretty good sign of relative strength. And that's exactly what we had today. We had an uptick in volume. Price was up another 6.6%. And this is one of the better looking charts in the market in my eyes. Ran from $2 up to $6. Don't want to buy the stock or the ETF extended up here. But after 3 weeks of pulling back, we've put in a higher low. Ugly price action yesterday that we should have followed through to the downside, and we don't. That's when bad price action is followed by like good price action like that. That's something to take note of, not to get bearish on. So I've got my stop under the low from September 19th on my position, but hopefully we won't get there and we can start trending higher again. KWEB, nice gap up after a close under the 10-day moving average. This is the Chinese internet ETF that I talk about almost every single day on this video. So hopefully you guys have gotten some Chinese exposure and just crushed it the last couple of weeks. Again, 3.5 year base, breaking out on above average volume, consolidating on lower volume. It is only midweek, so we'll see how that consolidation goes, but nice gap up today. Even if this like pulls back again into this area or all the way back to like a breakout retest, I don't think the Chinese theme is one that we want to ignore. Solar stocks, ugly close yesterday under the 5 and the 10-day moving average, followed by a gap up, reclaiming both of those. Did kind of squat, not the strongest close overall. But again, the TAN, the solar ETF, just getting that 200-day moving average sloping up. So a lot of volatility expected in that name until we get a clean uptrend on the 200-day. XLE, the energy ETF, I still see more and more rotation away from kind of tech and momentum names into oil and gas, XOP, or energy, XLE. We had this island gap down on Monday where we gapped down, we lost the 20-day moving average. We undercut and reclaimed the 50-day and the support gap. We followed it with a gap up and a secondary gap up. That combination is extremely bullish setup. And now we're right back at highs for the rally. We've consolidated here. And then zooming out, this is just like a massive, massive base. If I go to like a monthly chart, really big base that we've been building here. So the 200-day is still in a downtrend. Expect a lot of volatility, but maybe a theme to keep an eye out for. XBI Biotech ETF, great relative strength today. Red candle close over the 5-day moving average on very light volume, followed by a gap up in strength. The position in LABU that I have is continuing to work really well from the buys on August 12th. So we'll keep that working. Home Builders ETF undercut and reclaimed the support gap low. The 50-day moving average rallied up into a resistance gap in the 5-day moving average and then closed middle of the range. Now we're kind of bouncing between two gap zones. Whichever way we close, either close above the resistance gap, close below the support gap, is probably where we're going to continue to trend. Some other stocks or other industries to talk about, gold miners, GDX, a little bit of weakness today on an uptick in volume, close under the 5-day moving average for the first time in this pullback. We've seen rally above the 5-day moving average, pull back to the 10. So do we see that again? A pullback to the 10-day moving average, kind of a breakout retest? Or is this the top? And then we're going to go into a deeper correction. We'll take it day by day. And then nuclear with LEU, Oklo, some uranium names that pulled back a little bit today. Pulling into the 5-day moving average on declining volume. We'll see if we follow through to the downside there or if that's kind of the low of this little shakeout and we just continue with those momentum bursts. Getting into the long setups, we'll do this by average dollar volume. So most liquid to least liquid. First one is BMNR. And it's not the highest quality setup, but something that I'll be watching tomorrow. We've had another test and failure of the resistance gap. not a name that we want to buy into strength because we have so much overhead supply. The stock went from $2 up to 140, $150. Turned for 3 days, trapped a bunch of sellers. So you're going to have a lot of selling pressure in this name. We don't want to be buying it on strength. We want to be buying it on a shakeout so we can manage our risk really tight. We've had 3 days of pulling back, and the last 2 days have come on declining volume. We're back to the 20-day moving average. Two different ways to play this is if we get a gap down, which I'm kind of expecting with the market being weak the last 2 days, and we haven't had a gap down in the market yet. If we get a gap down, a rally that reclaims today's low would be the entry. The stop would be whatever the low of the day is. If we get a gap up, I probably won't trade it, but an opening range break versus today's low is the other trade. DAS, DASH, DoorDash, ugly action today. Kind of a bearish engulfing candle, losing the 5 and the 10-day EMA. Just looking for a pullback into the support gap, into the 20-day EMA, right around that 257 area as a higher low overall in the uptrend. EM finally kind of getting on my radar for a pullback. This stock has notoriously been a horrible stock to trade on strength. Much better to trade on weakness on shakeouts, but there really hasn't been many like gap zones to trade it with. Again, with the market starting to lose momentum, it's not the highest probability trade, but something that I'm watching after an ugly close under the 20-day moving average on declining volume. We'll look for an undercut and reclaim of the support gap low, 78.20 as the entry. Stop would be whatever the low of the day is, or 1 or 2%. 3 days of selling off, maybe sellers are getting a little bit exhausted here. RKT, this is kind of like finance and home builders a little bit. Came into the support gap zone today, didn't undercut it, so didn't take the trade. Just looking for a real undercut and reclaim of the support gap low as the entry. Stop would be 1%, 1 or 2% risk. This is also just kind of like a breakout retest as well. So if home builders do find buying support at that 50-day moving average and support gap and push over the resistance gap that we covered, RKT, little undercut of the support gap would be a really good risk reward spot to trade. Unity, just kind of chopping. This, I think you could say, is like a long or a short setup just because we've been churning here. We got the 20-day EMA catching up. Um, I like the action on September 18th enough where we gapped down into the support gap zone, immediately got bought up and closed back over the 10 and the 5-day moving average. I like this action enough to where I won't short it, but I'll be watching for another pullback into that support gap, into that 20-day EMA as a potential undercut and reclaim of that zone. HUT, one of the stronger stocks in the market, continues to consolidate over the rising 10-day EMA. Good action today, up 7%, 6.9, yeah, 6.9%. Just looking for a pullback into the 10-day moving average, that gap zone right around 35.40 as the potential entry. Not something that I want to buy on strength. I don't feel like this is the market at this point in the trend where I want to buy anything on strength. Everything that I want to buy is a little undercut and reclaim. PGY, I was all upset that I didn't take this trade on the breakout. And look what happened. You don't need to be upset because price will come back or you'll find other stocks. It made a really nice move from that August, was this? August 28th little gap up, rallied up to 44. Eventually, 4-day pullback below the 20-day. And then today, furthering that move to the downside on a pickup in volume. We did undercut and reclaim the support gap low, but with the 50-day moving average hovering right there, and the whole point of buying pullbacks is to shake as many people out as you can before entering to skew that risk reward in your favor. We won't, like, I'll look at the support gap, but I really want to see a undercut and reclaim of the 50-day moving average as well before buying this one. AAOI, another name that I was kind of sour on this morning, it undercut and reclaimed the gap zone right here. And it rallied really nice in the morning. And I was like, how did I miss this? It's okay. It closed lower than that. So we delete that gap zone. Closed under the 20-day EMA. Pretty ugly 2 days after uppercutting and failing the resistance gap up here. But declining volume today, like actually lower than average volume on the sell-off today, down almost 5%. So very similar to BMNR. Just looking for either a gap down and a reclaim of today's low as the entry, or a gap up opening range break versus today's low. If you're trying to, if we get a gap up, which again, I think the market, if I had to guess, the market is likely to gap down tomorrow, and then we can manage risk against that low. Talked about the XLE energy ETF, PARR, the best stock that I've seen in that group. Great consolidation today over that 5-day moving average. Just looking for a breakout retest of that 35.50 10-day moving average and gap zone. We'll see if we get that. And it looks like it's just going to break to the upside and trend higher, but I don't want to be buying things on strength. I want to be buying it on shakeouts. LAC, highest volume ever today, up 95%. Really good opening range break trade on this one. Kind of kicking myself for not taking that. Zooming out, an ignored stock. You got the 200-day that's been sloping down, basically downtrend, then sideways for a year. Huge volume on the potential that the government takes a stake in this. So they're doing a lot of that lately, just buying a bunch of private companies. So right now, I think it's gapping down a little bit after hours. A gap down reclaim of that HVC, the high volume close, would be the entry versus the low of the day. If we gap up, then a pullback into that HVC is buyable with a 3 or 4% stop. I would size it down because it's more news dependent, but highest volume ever breaking out after being completely ignored for months and months. That's how you get the start of big new uptrends. So we'll keep that on watch. Lastly, LASR. This only trades $25 million a day, so pretty thin. Made new highs on Monday, since pulled back into the 20-day moving average and the support gap zone on declining volume. Little undercut of that zone is buyable. Stop would be your 2 or 3%. Then on the short side, same thing, most liquid to least liquid. First up, we have Oracle. This, I think, so when we get a like highest volume ever, highest volume in a year, notable volume on earnings, something like that, I'll draw a line across the close and basically think good above, bad below. If you take a look at ANF, go back and study that chart, how that topped. We had a huge move on volume and then really only spent one day above that close before it rolled over. Oracle giving me those same vibes. Big move up 35%, 36% on earnings. Immediately sold off. They might have done an offering. I'm not quite sure. But then rallied right back up to the HVC, which you would think good price action, and I would agree with that. The one thing that you don't want to do after rallying back into a key spot, whether it be a moving average, round number, previous high, gap zone, stuff like that. So one thing that you don't want to do after that is an unfilled gap down, which is exactly what we got on the 23rd. We followed it with another gap down today. We did bounce off the 10-day moving average, but here I'll be looking for an uppercut and failure of the secondary gap at 314 as a potential entry. Stop would be just 2 or 3%. MSTR, probably the weakest growth name in the market. Really kicking myself for not adding to my shorts on September 18th. Perfect uppercut and fail of the resistance gap of the 200-day moving average. Next day, high or lower high, didn't even get to the 200-day. Followed that with a gap down. Weakness yesterday, weakness today. And this thing holds a lot of Bitcoin, right? We covered what Bitcoin's doing. Bitcoin's actually showing relative strength today, and MSTR is selling off down another one. What was this? Down 1.3% today, and the lowest close this entire downtrend. What I would be looking for is a lower high rally, maybe up to the 10-day moving average, right around that 332 area as a potential short when it comes back through the daily view app. If Bitcoin does rip and we start to put in higher highs on Bitcoin, then I would start to look at this gap zone at 345 as a better spot to like really size up. But overall, this chart's a mess. Like zooming out, this looks like it's just going to be starting its stage 4 downtrend. So we'll have plenty of time to short this on the way down. Next two, IONQ and RGTI. Don't think these are quite ready to be shorted. Basically, 100, not 100%, almost 100% move after this awesome like whatever you want to call it, cup handle. Basically, a year of consolidating after the big move in November and December of last year. Consolidated, then just massive volume coming in, riding that 5 day moving average. Today, we undercut yesterday's low, the 5 day moving average, and then closed relatively well. We did see some selling at the end of the day, but look at the volume compared to yesterday's accumulation day. Look at the daily closing range. There's still some strength in this name. Now, if we get a gap down tomorrow that just like immediately starts to sell off, maybe that's the top. But I really think that this is going to have like another day or two of just massive, like highest volume ever type action before a blow off top. So I think there are better shorts to attack on weakness than IONQ and RGTI tomorrow. But have these on our radar for that just massive volume comes in, potential blow off top. So RGTI a little bit more. Like this was up 8% today. At one point, finished the day basically flat on a big pickup in volume. So if there was one out of the two that I was looking to short on weakness, it would be RGTI versus today's high. But it's still not like overwhelming volume. It's high volume, but not overwhelming volume yet. IREN, same camp, basically going straight up. Awesome price action if you're long. Like if you're long, just because this is on my short watch list and I don't have a position in it, like you shouldn't just randomly sell it. I think it's acting phenomenally. But we did see a big pickup in volume today, a second gap up in the last week, and we're starting to see momentum kind of leave the market in other spots. Now, as the momentum narrows in the market, you are more likely to see IONQ, RGTI, IREN like soak up that last momentum, and people are looking where is left to trade on the upside. So you'll actually get some pretty crazy moves in the last few names that make those blow off top moves. So again, you don't want to be early to shorting these names. There will be plenty of room on the downside once they pop. Look for that overwhelming volume on the way up. Another gap up and then another gap up on Friday would be even better for this setup. Roblox, we had this huge gap up on earnings on July 31st. Since then, we gapped down, put in a little island gap at the 50-day moving average, rallied right back up through the HVC and that resistance gap, but we were never able to close above it. Yesterday, we had some weakness back through the 5 and the 10-day moving average. Today, closed positive, but right at that area. I would like to see one more like really tight day to firm up the risk reward on this trade. But through today's low, through the 20-day EMA would be a potential short. Stop, I would just use like a little bit above the 5 day moving average. I don't know if I would want to give it the end of the day, just because you want these shorts to work like right away or get out because we've gone through 2 days of pulling back in the market. Maybe that's all the market needs. So, like anything, like if you're not getting traction, don't stay stubborn, especially on the short side. TLN, kind of a similar setup to the LITE short from yesterday's video, where we kind of consolidate for a couple days. It's already made a massive move. Then you get a tight day at a key moving average, and then this gap down and then sold off 6.8%. TLN, huge move off the lows from 100 up to 400. Sorry. Now, like 3 days of consolidating at the 5 day moving average and declining volume. So this could just be like consolidating over the 10 day, and you could say this is viable through today's high. I would agree with you. I don't want to short this on strength. I want to short this only on weakness. But through the 3 days of lows right around the same price, that 416 area would be the short versus today's high is the stop. LIF, another name that's made some massive moves from 30 up to 105. Another name that gapped down off the highs, and then we still have not been able to close over that closing price from September 18th. We've rallied back up to it. We've uppercut it, but on a closing basis, sellers are still in that zone. We uppercut and failed 2 days later. Today was probably the entry on it, just through the 5 day moving average through the previous 2 days lows. So a little rally back up into that area, like let it uppercut 100 at least, and then a loss of 100, a loss of that 10-day moving average would be the short versus today's high. NEGG pickup in volume today without any price appreciation, finishing the day basically flat. A name that's already gone through its momentum phase from $3 up to 130, then all the way down to 30. Bounced for a lower high at the 50-day moving average, right around $50. Tight price action here, a little bear flag, just looking for a breakthrough today's low as the short. And MYT, we've seen some weakness out of like Royal Caribbean, out of Carnival. So people maybe taking some less trips. And this is a perfect example of your stage two uptrend, stage three top. And it looks like we're about ready to start our stage four decline here. Another lower high test of the 200-day moving average. Big distribution yesterday, down 5%. It is a slower moving name, so you can like size it appropriately. Little bounce back today. Just looking for an uppercut and fail of the 50-day moving average at 98. Stop would be over yesterday's high. And then last, ZEPP moved from $2 up to $52. Third gap down off the highs here. And we've seen some like volume pickup on the way up, volume decline on the way down, which in theory is good. But a lot of volume consolidating here after multiple big moves up while momentum is starting to leave the market. This is a name that, if it wasn't so thin, only trading $18 million a day, if it wasn't so thin, I would be like super aggressive trying to short a break under the 20-day. I will still look to short this though. Just through that 20-day EMA right around $46 is the entry. Stop would be the high today. So that's going to be the daily recap for Wednesday, September 24th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And once again, if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great rest of your night, and I'll see you guys in tomorrow's video.